Street's expectation. Even the commentary coming from the management is that if you think that this quarter is good, wait for the next one, it will even be better. And that's why we are seeing some bit of a pickup in IT stocks. They were a drag in the last couple of sessions. Remember, IT stocks started correcting when the inflation print, both on the retail front as well as the wholesale price levels, that came in hotter than expected in the US, and that had pushed back the expectations of a rate cut in the US, and that was weighing on the IT stocks, and we were seeing a good bit of a correction play out over there. But today's session, we were not able to or not only able to arrest the fall, but the IT pack on the whole were the drivers of the market today. They took the market higher and ultimately settled about 2% higher. Apart from the IT pack, it was auto, FMCG, media and metal indices that surged somewhere close to 1 to 1.5%. On the other side, the banking names certainly disappointed. The Nifty banking pack on the whole ended about with a minor cut of about 0.2% or so, that index, the Nifty banking index, that settled below the 47,000 mark, and I think that's crucial for the index because in this recent surge, it was a critical hurdle that we had taken out in the last couple of sessions. In fact, even in the pullback that we saw yesterday, Nifty Bank, it managed to claw back some of the losses and ultimately settled above 49,000. Now, the index on the whole did recover from the day's low. It tested that 46,500 support, and it did make a dash towards 47,000, but could not really get there. We still ended about 100 points shy of it with a cut of about 0.2%. The PSU banking index, now that recovered a slightly. That ended about 0.2% higher, but the private banking names, those disappointed, and the biggest laggard among them was, of course, HDFC Bank. And I mean, we have been talking about HDFC Bank for the longest of time, and we have been trying to figure out when this bottom will come for the stock. But I mean, it seems that there is some bit of a pain left for the HDFC Bank stock. It ended with a cut of about 1.2% today. Other banking stocks such as IndusInd Bank and Kotak Mahindra Bank, they continue to remain weak in the market. Both of them settled with cuts of about 1.1 to 1.5% as well. BPCL, that ended about a percent lower as well, and Hindustan Unilever was another stock which faced some price pressures today. But let's also look at some of the top gainers in today's surge, because it was the heavyweights that led today's price action. Coal India, that bounced back. It surged by about 3.5%. Bajaj Auto, what a spectacular rally first of all Bajaj Auto has been. It was one of the best performing stocks in 2023. So, almost turned multi-bagger with a surge of about 90%. But in 2024 also, the stock has given spectacular returns, and in fact, it was one of the top gainers today with a surge of about 3.5%. Eicher Motors, ITC, HCL Tech, all of them participated in the upside, drove the market higher. All of them rallied by 3% as well. But, to make sense of what's going on in the markets, because the trade has been choppy, although we have been climbing higher, let's also bring on board Mr. Rohit Srivastava, the founder of IndiaCharts.com. First of all, Rohit, thank you for joining us here on News9. Appreciate your time. What are you making of today's session? The markets corrected in the morning, but we almost saw a V-shaped recovery in the second half, managed to climb a new record high. Do you think that the shakeout that started yesterday in the last couple of hours of trade and lasted till about first half in this morning, is that over? Or do you think that that option expiry factor that had some influence in the recovery?
No, from an intraday perspective, I think the option expiry did play a role. There was a lot of call writing that has happened in the last 2 days for this particular expiration that may have resulted in some degree of short covering, and so that is sort of done. What we really need to do is watch out what happens over the next day or two in terms of these particular levels, 22,300 almost, maybe even 22,500. We leave that zone open, but my view on the markets remains one of caution, which it has been for a while now, even though a lot of equities have been moving higher. The index itself has not gone up that much as probably some of the stocks or particular sectors have done. In fact, we've seen in the short term, we've seen underperformance, go towards even the mid and small caps that are not really, those indices have not really made new highs relative to the Nifty, which earlier was only banking. So we continue to monitor that as a potential, risk to the market. We're not completely jumping the gun to new highs as of now.
All right, and there was an interesting report from Bernstein which highlighted, that most major domestic institutions, they are not really heavily invested in the PSU stocks in this current cycle. Their ownership in the PSU name stands at around 13.7% currently versus the 10-year average of about 14.6%. And instead, most of this rally has come from retail investors and foreign brokerages. Do you think that makes this rally, this spectacular rally that has played out in the last 12-15 months, a little bit suspect?
Well, suspect won't be the right word. There has been an inflow of funds, but the way that markets really work is that, when everybody starts to buy and everybody starts to participate, then at some point of time, markets exhaust themselves. Now, we saw a small sign of that in the last week when it actually rallied from 21,500 all the way back to 22,000. There was very, very thin volume, and that sort of indicated that maybe to some extent we have reached a point of exhaustion for the current buying. Even in the last 2 days, today also, I don't think the total volume exceeds what we were seeing maybe a week back. So that kind of divergence has happened. But we haven't seen a significant sell-off either. I mean, say PSU stocks may have been the stretch sector. The weekly RSI for the index itself is still at around 93, 94, which puts it in the extreme overbought zone. But we are still not seeing any kind of reaction there. So there is a natural flow of money. There is no doubt about that. Has that flow reached the point where everybody is participating and you have excess? There are signs. There are telltale signs from history to show us that that could be the case, and that's sort of why caution is really advised.
But sir, just in short, if you could help us understand, would you be buyer in the PSU stocks currently?
Oh no, I've been writing about the PSU sector for a large part of the last 2.5 years on the bullish side. But in the last 2-3 months, I have turned extremely cautious of the segment because they've moved up very, very fast. Right. So the answer is no, I would not be buying over here. I'll probably wait for a decent correction. Like I said, the weekly RSIs are very overbought. That needs to really cool off. All
right. Words of wisdom coming from Mr. Rohit Srivastav. Sir, appreciate your time, appreciate your thoughts. Thank you for being with us here on News9.
Thank you.
But before we wrap things up, remember, we are counting down to News9's mega global summit, What India Thinks Today. Prime Minister Narendra Modi will deliver the keynote address at the summit, and the theme of this year's summit is how India is poised for the next big leap on the global stage. Stay tuned to watch this TV9 network initiative on February 25th and 26th.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News9 Plus, ahead of the curve.
From fragile 5 to top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News9 Global Summit, a TV9 network initiative.
There's a new video around what deepfake can do.
We have seen a trailer of this a few days back.
Owners should not be only on the platform.
We'll have to wait and see how those play out.
Hindenburg's report cannot be taken as gospel of truth.
Watching Business Plus, we are bringing you stories from the world of business, policy and economy. Here are the top headlines we are tracking at this hour. PhonePe launches Made in India rival to Google Play Store. PhonePe's Indus App Store launched amid an ongoing standoff between Google and some top startups and internet firms over its App Store policies. And Baiju's founder, Baiju Ravindran, gets court relief in fight against shareholders. Karnataka High Court stays resolution from the extraordinary general meeting to be ineffective till 15th of March hearing. India's GDP growth to moderate to 6.5% in financial year 25. Morgan Stanley flags off risks emanating from global factors as well as elections in 2024. And My 11 Circle outbids Dream 11 becomes official partner for the upcoming IPL season. Delhi government issues guidelines for handling end-of-life vehicles in public places, a penalty of 10,000 rupees for four-wheelers and 5,000 for two-wheelers to be imposed on owners. We're tracking all those stories here on News9. I'm Shweta Kothari. With me is my colleague Krishna Kumar. Krishna, I think a good story that is coming in at this point in time from PhonePe's stable, and that is we now have a Made in India app store. It's called Indus and it's been launched by PhonePe.
Right, and typical to being an India-made product, Made in India product or a Made in India addition to the digital ecosystem in India per se. It's going to be in 12 Indian languages. You're talking about 200,000 or 2 lakh mobile apps and games in 12 Indian languages, which covers about 95% of the population in terms of the languages it covers. So it's quintessentially Indian in the sense that when you're launching something like an app store, India-made app store, you have to keep in mind the different languages in this country. It offers, most importantly, it offers developers a commission-free ability to list on the App Store, to develop apps, to localize apps. So it is a great platform for app developers and game developers in India who always have to keep in mind the 15 to 30% commission they have to be on any other app store. In this case, it's going to be sans that commission, which is a very important step in the right direction for all the millions of app developers and game developers in this country. So it's a great platform. You're talking about a company that's already there in something something that's very crucial, which is the payments business. And even as that business continues to grow, they've sort of, in the sense, that's the CEO's message of the PhonePe CEO, Mr. Nigam's message is that this is our commitment to building India's digital ecosystem and building it in a way that's meant for Indians across the board, Indians consumers as well as Indian app developers as well. Shweta.
Absolutely, and let's also put this in context. This also comes on the back of the fact that Google has been facing serious charges on its App Store policies, which many believe, and many countries including India believe, are anti-competitive. They do not allow local players, Android players, to flourish by one way or the other. Now, this perhaps could be an alternative to everything that Google Play Store has been offering or not offering to local app developers.
So basically, that's what I'm talking about. The 15 to 30% commission on all in-app purchases for online services is a hard pill to swallow. That's the problem for as far as the app developers looking to put their apps on the Google Play Store is concerned. Or for that matter, there is that commission, there is that issue when it comes to making sure your app is listed on any